Welcome to Galaxy Brains.
An infinite amount of cash.
I'm your host, Alex Thorne.
The U.S. banking system is sound and resilient.
Bitcoin made a new all-time high.
If you're not long, you're short.
Satoshi's going to come on there, laugh hysterically, go quiet. All Bitcoin's going to be erased.
Bitcoin's the best crypto asset.
Bitcoin is going to zero.
Welcome back to Galaxy Brains. As always, I'm your host, Alex Thorne, head of firm-wide research at Galaxy. Bitcoin not zero. And we have a great episode for you this week. Kyle Samani, co-founder and managing partner of Multicoin Capital, and now chairman of Forward Industries, a new Solana digital asset treasury company, is our guest. I'm going to talk with Kyle about Solana, its prospects versus other chains, why he is leading this new digital asset treasury company, Forward Industries, why the time is now, and quite an interesting conversation with Kyle. And of course, we'll check with our good friend Beimnet Abebe from Galaxy Trading. As always, we'll talk about this week's rate cut from the Federal Reserve, what it portends for markets, why the Fed finds itself in between a rock and a hard place, and what might come next for rates and therefore markets. Before we get to that, I need to remind you to please refer to the link to the disclaimer in the podcast notes. And note that none of the information in this podcast constitutes investment advice or an offer, recommendation, or solicitation by Galaxy or any of its affiliates to buy or sell any securities. I want to give a big shout out to one of our biggest fans, Bill Burgess, my friend. Congratulations on the great wedding last weekend, and thank you and all of the rest of our listeners for listening to Galaxy Brains. Let's hop right into it with Beimnet. Let's go now to our friend Beimnet Abebe from Galaxy Trading. As always, Beimnet, welcome to Galaxy Brains.
Thanks for having me.
Well, it's a big day. It's Fed Day.
Yeah, absolutely.
We got a 25 basis point cut out of the Fed. Before, I want to ask about some of the dissension in the Fed, but also just, was this a dovish cut? Was he yelling at us about hawkishness while cutting? How would you characterize this cut?
A very challenging one. I think you have as much uncertainty about Fed policy as you've had in recent memory. One of the main lines that, stuck out to me today during the press conference was the Fed's policy tools can't do two things at once, right? They can't tackle high inflation and weakening employment at the same time, right? And so the way he characterized it is, our challenges are immense and high level. We need, the economy's been, monetary policy has been too restrictive in the context of the labor market data that we've gotten, right? I think any Fed person was surprised by the magnitude of the revisions, right? We had a 910,000 downward revision to the labor market data last week. And yeah, so he's concerned about the labor market weakening. That's partially a function of, layoffs, but also labor supply going down. And so to summarize it, he's reasonably concerned about the labor market, but also concerned about inflation, and he thought that it would be appropriate to cut 25 in that context.
It's so interesting. So the labor market, then, if inflation's still above target, which it is, then the labor market softening or weakening, or it's not fair to say contracting yet, right? But
it's not contracting yet.
But softening, that's the main impetus for the cut then?
Yeah, that is the main impetus for the cut. And one of the things he highlighted about the labor market is, jobs are becoming harder to find. And so if you lose your job, it's going to take you much longer to actually get a job. And so if you get this downward spiral of people losing their jobs, it's going to be harder to, come back from that. I think, if you think about it, like, let's say one of the main reasons that people lose jobs nowadays is because of AI, right? Once somebody takes over, an AI takes over for a job, like, it's going to be really hard to be like, oh, I'm going to hire somebody because I just replaced them with this AI. So, it gets a bit harder.
So it's like the economy could contract a little bit, not literally contract, but slow down a little bit, leading to layoffs. But then when it starts growing again, the growth might come from automation, and the labor market might remain stagnant.
Yeah. And, and the other things he highlighted was that because the labor supply is shrinking, largely due to immigration, the run rate you need to kind of keep us closer to full employment is actually smaller, right? So let's say, a year ago, you might have needed 125,000 jobs per month to keep us at a neutral rate of unemployment. But now you might need like 85,000 or 75,000. And so that number has also come down. And the other thing that is just like so apparent in the data that Powell touched on is kind of the tale of the two halves, right? By halves, it's not even halves anymore. It's really like the top 20% of people and the rest of people, where you see things like, spending amongst top income folks like actually increasing, and their spending power beating, the rate of inflation versus, the rest of, the population, where their purchasing power is net declining or staying flat, right? And you see it in, asset prices as well. Like the S&P is at an all-time high, right? NASDAQ's an all-time high. Property values are at all-time highs. And so there's a huge, divergence between those areas of the population. And Powell specifically highlighted, youth unemployment, starting to tick higher, also unemployment amongst minorities. And the way he characterized it was, the unemployment for vulnerable parts of the population, is something that he is concerned about. And, his mandate is really to help more Americans and all Americans. And so, there's part of him that's like, I want to cut because there's a lot of folks that are in pain. At the same time, like, inflation's an issue. And once the inflation genie gets out of the bottle, it's really hard to put in. And so, he's got a really hard dynamic. And at the same time, as a market participant, it is just so hard to like actually understand where policy is headed, right? Going back to your first question about the dissent,
Yeah.
right? It's really notable that the most recent Fed appointee that's also technically employed by the White House right now was the most aggressive person in terms of, their rate policy.
You're talking about Steve Mirren,
yeah.
who just joined as a Fed governor.
Yeah.
And he was in favor of 50 basis point cut.
Correct.
Right?
But his dot plot also
even more
for 2025 literally looks like the biggest outlier ever.
It's just down with rates.
It's like 100 bips lower than everyone else for the end of 2025.
Right.
And it just doesn't, make that much sense. And I think what's notable is that Powell was able to get consensus amongst the rest of the members, right? So 9 of the 10 voting members agreed with Powell and,
For 25 this time.
correct. But if you start looking beyond, like the distribution of like dot plot estimates for members is like really wide. And when you think about the fact that, Trump is pursuing policies that are essentially going to put more people like Mirren on the board, it's like it's really hard to know like how relevant the dot plot is at all. And then you also have Powell telling you that it's still meeting by meeting. Right. And just because, the dot plot says that the median dot is forecasting 2 more cuts this year doesn't mean that, they will actually do that.
So you can't rely on this dot plot as much right now.
You can't, but it's just, it's just tough for a market participant. And, I think the stock market isn't the economy. And I think a lot of the market does hinge on people feeling like they're going to have a job for the foreseeable future. And so, like, the labor market is very important to people because, one of the reasons why people feel so comfortable not selling their house is because they have a really good rate, most likely, but also because they forecast themselves being able to make their mortgage payments because they're still employed, right? And so if you start to, lose jobs, particularly on, some of the white-collar, higher-end jobs because of AI, like, that could have a meaningful, trickle-down impact on
housing.
In housing,
That's
right?
fascinating.
So it's a really interesting set of conditions, and one of the other big things that's been going on in the marketplace basically since Labor Day is you've had the dollar weaken, right? And all of this uncertainty around Fed policy and Fed independence, is leaking its way into markets via the dollar, right? And euro was testing 119 and change at some point today, and gold is making a fresh all-time high every single day, right? And so the the perception of, the U.S. as being, run in a sound way from a monetary policy perspective and a fiscal policy perspective is getting challenged by the day.
Right.
And so, it'll be interesting to see how crypto fits in that landscape. I do still believe in the digital gold thesis. However, I'm more inclined to think that the balance of all the data and what I've seen over the past couple of years, that it's more akin to like equities and risk assets than it is to like a true fiat, debasement hedge. And so, I think for crypto, the main thing to watch is probably equity markets, not
Monetary
gold,
policy and
right?
gold,
Because if we were really tracking gold, we would probably be going up a ton right now.
I know. It has lagged Bitcoin gold in the past, so perhaps a move is still possible. But I mean, I agree. So we record this on the 17th of September, so Wednesday, shortly after Jay Powell gave his press conference. Right, Bitcoin's around 115.5. Is that what it says over my shoulder?
Yes.
115.7. Unch, as they say, unchanged on the cut, basically. Briefly a little tiny bit higher, but not really changed. Whereas gold reacting, right? Other things reacting. That some of the now most of this was priced in.
Correct.
Literally, the rates market's what we're pricing 27 bip cut, so it's
Correct.
basically one cut, like they
Exactly.
got. But I wonder then, with the sort of volatility in the dot plot, maybe call it that, or the widespread in the dot plot, that's gonna. Do you think we're going to see some volatility in rates markets?
I mean, it's totally possible. It's just really hard to gauge right now. I think one thing is clear: there's going to be a ton of issuance.
Yes. Yes.
Over time, big beautiful bill, $3+ trillion deficits. There's going to be a ton, but if the balance of risks is really skewed towards easier monetary policy, then that should benefit the bond market. So it's super tricky.
Gotta wait and see.
And that there's so many different levers that the government has to kind of cool the bond market if it ever gets too aggressive. One that comes to mind is obviously going from running off your balance sheet to actually expanding your balance sheet if you're the Fed. The other thing that's been proposed is cutting the rate that the Fed pays to banks to park deposits. So if you cut the interest rate on excess reserves, or IORB, below, like let's say you cut it in half, those dollars would probably find their way into the bond market because they want
Gotta go
more
somewhere.
yield.
Yeah.
You could change bank regulations around to allow them to take more risk in the bond curve. So there are things we can do over the next couple of years that kick the can down the road, but the issue ultimately doesn't get solved.
Yeah.
And I would just highlight that there are plenty of economies, particularly in emerging markets, where unemployment is real bad, and yet inflation's really high, right? And so there is this weird situation you could find yourself in ultimately where, the economy slows and inflation is still kind of lingering.
This is what they call stagflation, right?
Correct.
And it's one of the hardest, as you mentioned before about the Fed, it's one of the hardest things to address because they're fighting a dual purpose. Their dual mandate is pushing them in opposite directions.
Correct.
Which is why you get this. We're worried about the labor market, but we're cutting a little bit, but we're also worried about inflation, so we're not cutting a lot.
Yeah.
And you could see that go the exact opposite way. Well, we're worried about inflation, so we're hiking a little bit, but we're also concerned about unemployment, so we're not hiking a lot. Like it's sort of 6 1/2 dozen.
Yeah.
Right. But I think you're right. It feels like it's still long-term a bias towards lower rates over time.
Yeah, no, absolutely. Particularly when that Powell will be out of the Fed. Well, not technically, but he will no longer be chairman halfway through next year.
Next May or so, right?
Yeah, around there.
And so I don't know, how many other appointments does President Trump have during his term?
Well, if he just arbitrarily fires people for
well, the Fed Governor Cook was still in the meeting, right? And voted.
No, absolutely.
So we'll see if that even works. If it doesn't work, then we're just looking at like term expiry and what are they, 10-year terms, right?
Very long. Yeah.
Yeah. So
don't know.
But I agree. I think you mentioned it is notable that the most recent appointee by President Trump is also the most aggressive on being dovish.
Yes. And which makes you really like the crux of like the Fed, at least in my lifetime, has been that they've been an independent arbiter. And that Fed independence, I think, is really critical for, dollar reserve status and confidence in markets. Like if you're a corporation and you are planning your CapEx for the next 4 or 5 years, if you're somebody modeling, purchasing an asset and you have to, discount the cash flows, et cetera, like the variability about of the numbers that you're inputting, like have to be higher.
I mean, you have to assume that every person that Trump appoints successfully to the Fed is going to be dovish, right?
Yeah.
And so,
A reason, like at least not a hawk.
yeah.
How about that?
Well, it's going to be exciting. I was hoping for no cut. I thought that would have been the most exciting outcome.
I was
That would have
hoping for
stunned
some
them.
volatility.
Yeah,
absolutely.
It was a pretty muted response in general.
It is.
Following the trend and no major difference. So maybe we'll see if that sticks when we talk next week. Beimnet Abebe from Galaxy Trading. Thank you so much.
Thanks for having me.
Let's go now to our guest, Kyle Samani, co-founder and managing partner of Multicoin Capital, and as of very recently, Kyle, chairman of Forward Industries. Welcome to Galaxy Brains.
Pleasure to be on Galaxy Brains. Alex, I got to say, I didn't think for a show called Galaxy Brains, the host should be wearing a suit.
I think this is the first time I've ever worn a suit on the show. I have to go to the dreaded Midtown of New York after we finish recording.
Shouldn't your background be the meme where it's like the four brains kind of exploding over time? Isn't that the correct background?
Yeah,
for this?
we should use that meme, right? And we should, but I don't think anyone would think that the final one, the most universal explosion of the brain, would be me in this suit with a hat on. I don't know, like not looking Galaxy Brainish, right? I'm looking pretty normie. Got the hat on though. Kyle, I mean, I think the big news of the moment here and was the latter part of your title, new chairman of Forward Industries. What is that? And well, I mean, I know what it is, but why don't you tell our audience what Forward is right off the top here?
Yeah, so Forward Industries is a NASDAQ-listed, publicly traded company. The ticker is actually Ford, F-O-R-D. Yes, like the car company. Forward Industries has been around for 20 some odd years. And they have a design business that kind of designs medical devices and other industrial equipment and such. We got to know the management team at Forward Industries over the last few months, and we all kind of agreed there was a very unique opportunity to engage in a Solana treasury strategy. And so there was a big deal put together. It was a PIPE that invested into Forward Industries. That PIPE was co-sponsored by three firms. Those three firms are Multicoin Capital, which is the firm I founded, along with Galaxy, as well as Jump Trading. And the three of us co-sponsored a $1.65 billion PIPE that invested into Forward Industries. That transaction closed last week. All of the money is now in the company. And as part of that transaction, I joined Forward Industries as chairman.
So you are are you becoming the Michael Saylor of Solana? Is that like what this role is, or is there something more to it? Because I think what I'm hearing from you guys at Forward Industries is a lot more than just acquiring Solana.
Forward Industries is the largest Solana-based digital asset treasury company in the world by a pretty wide margin, and we very much intend for that to stay that way. Our aspirations are a lot bigger than the status quo. We're only a few weeks into this. We intend to go very big with this. We hope that over the next 5 to 10 years, this can become a $50 billion plus publicly traded permanent capital vehicle that is one of the preeminent holding companies and investors across the crypto ecosystem. A number of people on the internet have been calling me Sailor of Solana, and while I'm very flattered with the analogy, if you know me at all, one thing you'll know is that I hate analogies, and so I disagree with it. And look, I think our ambitions with Forward are different than what Saylor has with strategy. I literally had drinks with Saylor last night here in DC, and he's obviously a Bitcoin guy, and Bitcoin's great. But the challenge with a Bitcoin treasury strategy, is that Bitcoin doesn't organically produce cash flows, and Solana produces cash flows in a number of ways. First is obviously staking. Second is participation in DeFi. And then third is, we can actually borrow dollars either from crypto lenders or from banks, and then we can plow those dollars into DeFi and kind of earn some credit spreads. I am optimistic, although I can't guarantee that forward industries will be able to borrow in the 5 to 7% range and deploy into dollar-denominated Solana DeFi in the, call it, 15-ish% range. And that's a very nice spread to earn, all of which, of course, goes to our shareholders. And so, by being an actively managed, thoughtful steward of capital in the space, we believe we can earn incremental value for our shareholders. And to be clear, the North Star that we look to in running the company is actually increasing the SOL per share outstanding.
Yeah, I think your point about the sort of productive nature of Solana versus Bitcoin, and it would be true. It is true also for basically any proof of stake network at a minimum, like versus Bitcoin's proof of work, right? Where the capital, the Treasury can itself at a minimum earn the staking rate. I think that is probably one of the most important distinctions between Bitcoin and every other Treasury strategy, right? And Solana has some, but I love that point of yours, and I think if we stick with that for a second, I do want to talk about Solana, its technology, its roadmap, and application revenue also being a very interesting thing. We obviously do a lot of research on Solana, and I've got smart Solana researchers telling me these updates. It really is leading on many metrics. We'll get to that, but I want to talk about the building the staking business, and then perhaps what other maybe business. Unlike Bitcoin, in Bitcoin the capital and the consensus are separate. In proof of stake networks, they're necessarily tied together, which means that when you amass a large treasury, you can become a large consensus participant, which has a whole bunch of other things. How are you guys thinking about that at Forward?
Yeah. Forward owns 6.8 million SOL, as we disclosed publicly a couple days ago. And actually this morning we announced our ATM shelf registration of up to 4 billion in shares. So, today we own a little bit more than 1% of all the SOL tokens. And obviously our aspirations are to increase that. We fully understand that we are going to be a large stakeholder in the Solana network. And we understand the importance of delegating that intelligently and responsibly. We obviously are working with the folks at Galaxy Asset Management, and Galaxy Asset Management has spun up a node for Forward Industries. We haven't publicly disclosed the public key yet, but we will pretty soon. And we intend to distribute the stake not only with Galaxy's nodes, but with a lot of other participants in the ecosystem as well. We think it's important for the overall health of the Solana ecosystem to spread the stake around and to have the SOL go to a lot of different places. So you should expect to see that activity ramp up, and you'll start to see press releases around all of that stuff in the pretty near future.
Yeah, I think it's quite. It's going to be quite large. It's already quite large. Over 1% is already a milestone, and so congratulations on that. One thing that I think sets Solana apart, and it's part of the reason that we looked at Solana to tokenize Galaxy stock, which we did, and as our audience will know, on Solana, is it's sort of designed for institutional trading, right? And it's like you can design a blockchain in a lot of different ways, but Solana is extremely optimized for speed of finality, transaction settlement. It's the fastest blockchain that I'm aware of on a theoretical basis. It's also basically the fastest on an actual pragmatic basis today in terms of the number of transactions that it is actually settling, right? So even on a combo of demand versus potential, it's the leader today. What do you see as sort of just the long-term vision? Anatoly has described it as in the past as like the NASDAQ of blockchains. Like, does it, tell our audience your vision for the long term of Solana, and then maybe assess how close are we to there, right? Is it happening? Is it working?
Yeah. So for some context, I founded Multicoin back in 2017, and Multicoin is probably most well known for its investment in Solana. I led the investment at Multicoin in Solana. And actually, the Solana team raised 3 rounds of financing in the early days before they even launched a token and the network. The network launched in March, April timeframe of 2020. So basically right at the beginning of COVID. Multicoin led all 3 rounds of financing prior to network launch. So we've been in the weeds with Solana from day one, been through the trenches with Toli and Raj. We've been through some pretty rough times together. They have almost died multiple times. The original vision that Toli pitched me all the way back in 2018 was decentralized NASDAQ. And that was kind of like the North Star for probably 6 or so of the last 7 years. And really in the last year or so, a kind of a new term has emerged from the Solana community that we very much have embraced and espoused. And that term is internet capital markets. And I think internet capital markets is the spiritual successor to decentralized NASDAQ. Decentralized NASDAQ is kind of by definition a very backwards facing statement. I mean, we're literally referencing a company who we believe we will displace in the long term. So it is kind of silly to refer to yourself through that lens. But I think beyond decentralizing the trading system, what the term internet capital markets really speaks to is the ambitions of making trading feel like an internet native primitive, which it very much does. And it's also helps understand the ambition and scale. I think most people today appreciate the fact that in the last 30 years, the internet has changed basically every facet of society. And we believe internet capital markets are going to change every facet of finance, trading, and even just public discourse and understanding around risk and finance. And so that's how kind of the thinking has evolved. In terms of the path to get there, job's not done, and that's a big part of the reason why we're doing this. Solana has made incredible progress in the last 5-6 years. And today, the system is steady state processing 1,000 to 1,500 transactions per second. And we see spikes regularly now in the Solana network, upwards of 10,000 transactions per second. And the network handles those very, very fluidly. There's now people doing tests on Solana mainnet so forget about test environments or staging, but on production global mainnet of upwards of 100,000 transactions per second. There's been a handful of tests to that effect. And the aspirations very clearly are to get to north of 1 million transactions per second. At 1 million transactions per second or more, we have the ability to handle, I think, basically all global trading. And that's an incredible scale. We're not there yet, so we have a long ways to go. But I think there's a pretty clear path to get there. And there's a lot of major upgrades coming in the coming months that we think are going to get us there. Double Zero is going live in the very near future. Alpaglow is going to go live probably early next year. And there's a slate of upgrades slated set for really the remainder of this year and all through next year that we think are going to get this thing down to actually be able to be functionally better and lower latency than NASDAQ and NYSE for the vast majority of traders around the world. So long way to go, but I think Solana today is in the prime position to pull it off.
Yeah, it's pretty incredible. What do you make of, there's, I think one of the more interesting tribal debates in crypto is between Solana with its sort of high speed layer one sort of focus, I'll call it, versus the Ethereum modular approach and why they think everything will be done on L2s. Like, what's your reaction to that criticism that, there must be, I don't know, one way it manifests, they say there must be some centralization in Solana that's unpalatable to us Ethereans to get to that speed? Or how do you react to the L2 thesis versus the Solana, faster L1?
I think probably an element of this debate that I think really gets minimal airtime, and I actually think is probably the most important element of it, is what we've observed in crypto, the 3 largest crypto systems, so Bitcoin, Ethereum, and Solana. And if you look at each of them over time, starting Bitcoin in 2009, Ethereum in 2015, and Solana in 2020, is that as each of them grew bigger in market cap, they became more decentralized. And that was a function of a lot of things. But kind of by definition, if the market cap goes up, then that means more people from who were previously outside of the system got involved in the system. Some of them just passively with dollars. And then some of them, built stuff, and some of them did mining, and some did staking, and some people wrote validator clients and whatever, right? it's a heterogeneous world out there. And as you allow that to compound over many years and into many decades, if people believe in the vision, and if people continue to put their money where their mouth is and buy in, and some percentage of those people show up and do work of some form, then by definition, the system is decentralizing. And I think that is, I think probably the biggest flaw in the criticism that the Ethereum people level against Solana is they focus on this super narrow view of like hardware requirements. And like, okay, you can run Ethereum on $1,000 computer, like fine. You run Solana on a whatever $10,000 server. I don't even know whatever the server costs are. Let's just say it's 10, even 15K, whatever. That's such a myopic understanding of these systems. And anyone who has an appreciation for them will understand that, you know, there's no one vector of decentralization. You have Nakamoto figures. You have, 33% thresholds, 66% thresholds, validator clients, stake distribution. And anyone who is going to apply any intellectual rigor to this will understand that these are very heterogeneous constructs. And so, I think about the success of Solana decentralizing is like, well, look, people have bought into this vision of internet capital markets, and folks like Galaxy Jump and Multicoin and many others have put their money where their mouth is. The sponsor group in this pipe literally just put in an incremental 390 million, roughly. On top of that, I put in 25 million personally on top of that. So that clears you over 400 million. And that's after 5 years, we've been at this for so long. So we believe in this thing, and we're all rolling up our sleeves and working to build the future of internet capital markets. Talking about hardware requirements is just kind of silly. These are open source systems, permissionless. Consensus is permissionless, and anyone around the world can show up and get involved in them, and that's what matters.
Yeah, and I think it's totally reasonable to have different views, even on hardware requirements, right? Like, to me, it's not necessarily a negative. I don't think it's more or less, maybe the average person can't, use a Raspberry Pi and stake their Solana out of their house. But, for example, by the way, Solana has native stake delegation anyway. So, like, you actually can just a regular person doesn't need to run their own validator in order to stake anyway. It's just a different design, though. And I think you're right. I mean, if you want to argue which design goal is better than which other design goal, I think you can make fair arguments on either side. But I agree, neither is necessarily subjectively better. And if you want to be internet capital markets versus an OG sort of cypherpunk view of how consensus is supposed to be reached, like, those are just different ideas.
Yeah, I mean, I actually think you're giving the Ethereum people too much credit. Like, the Ethereum people have preached credible neutrality for a long time, and like, I agree, Ethereum L1 has a degree of credible neutrality that it's taken a decade to build, and like, there's value in that. The problem, though, is that the Ethereum Foundation and roadmap says, well, Ethereum L1 is silly, go to the L2s. And the L2s are in no way credibly neutral. Base is literally one Amazon server. I think it's in Virginia. Maybe it's in California. I forget where it is, but I can tell you it's in the continental United States. And you know what? When you go to a guy who lives in India or in the Philippines or in China or in Nigeria or in Russia, and you're like, hey man, Base is an open permissionless system, it's credibly neutral, they're just going to laugh at you. Like, it's so obviously not a credibly neutral system. And you see all these antics around, like, oh, failover and forced inclusion back on the L1 and all of this stuff. And it's like, guys, those are by definition fallback mechanisms. B, like, if you had any scale on Base and you had to fall back to the L1, it wouldn't all go through. Like, even if you forcibly included everything back to the L1, it wouldn't work as a matter of throughput and capacity. And C, it's just like you're just ignoring the basic optics. Like, what are you doing? And meanwhile, you look at Solana, and Solana's, rotating nodes every 1.6 seconds around the world. And I think by this time next year, that rotation will probably be down to like half a second or less with Alpenglow consensus upgrade. And I think probably sometime in 2027, we'll have multiple concurrent leaders. so that you'll have validators, in multiple countries at the same time. And look, well, it's way too early to know how fast MCL will evolve, but certainly the vision for multiple concurrent leaders on Solana is to have, dozens of concurrent leaders. And if you have dozens of concurrent leaders, that means the guy in India and the guy in China and the guy in Argentina can actually all look at the system and say, oh, yeah, like I understand how this is actually a global, credibly neutral system that really does fulfill the vision of internet capital markets.
Yeah, we've been critical of the Ethereum L2s as well. The idea that, well, at a high level, after all of this, like they're comfortable basically just doing most activity on some guy's computer, basically, is what the optimistic rollups are. And that just is surprising to me. Well, the whole story was that they would eventually decentralize the sequencers, but I don't think certainly
that's dead. All those teams pivoted. They're gone.
Yeah, and so well, and something like 80 to 90% of all ways of measuring roll up volume are on Base in particular, which is one company's computer, like you said, in some AWS instance, and one of probably either on the East Coast or the West Coast, which is okay in my mind. That's fine. It's okay for some things, but we in particular did not think it was okay for stocks, because that looks a lot just like NASDAQ, to be honest. NASDAQ is a big giant computer that can unilaterally change things and cause errors either by malice or negligence. And so it's highly regulated. So we're like, okay, great. Our argument has been, we're happy to put stocks on Base if that's where the market goes, if they're regulated, so that we know that our shareholders will be protected by their unilateral control of it. That's been a big part that, as we said, when we set out to do our own stock tokenization, we looked at, because of this, we only really considered L1s. And then we were like, well, there's only really ETH or SOL to consider. And then the difference between L1 performance is frankly stark, right? With Solana significantly more performant. So it was a pretty easy choice for us.
Yeah. I think I've tweeted this probably a dozen or maybe 24 times over the last 18 months. The future of Ethereum is Coinbase. And 18 months ago, it was a little bit out there. And, as of today, September 2025, I actually think that's kind of a consensus view, even among Ethereum people. So yeah, it's like Coinbase took over Ethereum. And like, as a practical matter, Ethereum has become everything it said it did not want to become, despite their stated values. Yeah. Look, I think there's probably live today something like 30 plus or minus. Seems like there's a path that probably 50 or more will exist. I do not think the market is going to sustain 50 of these things. And I think the inevitable outcome is M&A. And the logical acquirers of these DATs are other DATs. We are fortunate to be where we are. I think we really do have the dream team between Multicoin, Galaxy, and Jump. And we very much intend to be on the acquiring side of this. There's going to be opportunities to deliver accretion both to the companies being acquired and to the acquirer. The illustrative transaction would be, let's just say we're trading at a 1.5 MNAV and someone's trading at a 0.6 MNAV. You can buy them at 0.7 or 0.8. That's accretive to both parties. And I expect that configuration of transaction is going to happen a lot. It will, even just amongst Solana DATs, there are, I think there's 4 or 5 live now, and looks like there's going to be 7 or 8. I don't think the market's going to sustain 8 Solana DATs. I think to the extent it sustains more than one, it would probably be on a regional basis. And I do think there's a legitimate argument to be had that it's good for Solana to have DATs that have kind of a regional presence. So we'll see how that nets out, but certainly is a reasonable theory. I think though the DATs that are probably going to be the most in trouble are going to be all of the subscale DATs for the smaller assets. I think the Avalanche DATs, the Sui DATs, the Dogecoin DATs, all those. I think those folks are going to be in a real sticky situation in the not too distant future. They don't have scale. They don't have that global legitimacy and recognition. I would not be surprised if a lot of those are trading down to 0.3, 0.4 MNAVs. I think that's totally on the table.
Well, it's a really exciting time. I mean, I'm excited to see, I have ideas for what a forward might do, RPC businesses with all the stake and the validators and maybe startups that are, honestly, like early stage venture would be interesting to me for a company, for a DAT in general, like, which I know is probably doesn't seem like what a lot of people are thinking, but there's some great, for example, in the Solana ecosystem, some great big companies, and those might be too expensive to just go out and bring into your company. But there's early stage stuff here too, and then you've got Jump, and I'm just thinking like, oh, Multicoin brings a lot, but one of the things could be total knowledge of and exposure to the ecosystem through early stage stuff. You've got Galaxy, a big service provider, and you got Jump, which in addition to being like one of the world's fastest and best trading firms, they develop Firedancer, the new fast client for Solana. And I can't wait to see, frankly, how this, I don't think I've seen in, not just in Solana, but in general, a sort of a tie-up of a triumvirate like this with ever really in a business. It's a very interesting business combination that you guys have. And so anything you can tell our audience about how you think that's going to manifest and exciting stuff for forward before we wrap?
Yeah, I think if you look across the DAT landscape, I don't think there's a team that looks remotely comparable to the Multicoin Jump Galaxy team. And I think the market will also see that pretty clearly. Certainly in our private conversations and investors when we were raising the pipe, that's what folks told us. And look, I mean, we're not here just because we're lucky. We're here because we've all been busting ass for a long time. And all have been investing deeply in the Solana ecosystem for a very long time. And we all kind of looked at each other and we're like, guys, like we know this is it. Like, let's go knock this out of the park together. So I've been incredibly fortunate to work with the Jump and the Galaxy folks. It's only been a little short time we've been working together, but already the partnership has been nothing short of exceptional. And looking forward to kicking some ass with these guys.
Well, there you have it. Kyle Samani, co-founder and managing partner of Multicoin Capital, and now the new chairman of Forward Industries, which is on the NASDAQ as FORD, right, Kyle?
That is correct.
Thank you so much for coming on Galaxy Brains.
Hey, Alex, thanks for having me. Pleasure to be here. See you soon.
That's it for this week's episode of Galaxy Brains. Thank you to our guest, Kyle Samani, co-founder and managing partner of Multicoin Capital and chairman of Forward Industries, and our friend Beimnet Abebe from Galaxy Trading. Everyone have a safe and happy weekend. We will see you next week. Thanks for listening to Galaxy Brains, the weekly podcast from Galaxy Research. If you enjoy the show, please like, rate, review, and subscribe wherever you get your podcasts. To follow Galaxy Research, sign up for our weekly newsletter at gdr.email, read our content at galaxy.com/research, and follow us on Twitter at GLXY Research. See you next week.